Everybody, thank you so much for joining us today. And today we're going to talk about something that quietly breaks a lot of businesses, and that is access to capital. Not just whether a business can get funding, but whether they get the right funding. Because if you've been around, you know that small businesses, it takes a long time. You've seen it. Founder finally gets capital, but it could be the wrong structure, it could be the wrong cost, or the timing's all off. And suddenly, everything that was supposed to help you grow just starts suffocating you. Then we add on another layer of just talking about how AI comes into this whole component of looking for capital. And so today I'm really excited to have my friend Blair, who works for Breva, and talking about how small businesses can access this capital that's out there and just a whole new way of looking for it and making sure that you can get what you need. So thank you so much for joining me today.
Hey, thank you, Christy. I'm really looking forward to this conversation. Definitely topics
Yeah.
I like to talk about.
So tell us a little bit about your background and kind of what led you to get into the place where you are today.
Yeah, so I like to say I've been in fintech since before fintech was fintech. Might account for some of the blonde in my beard. Blonde, we're going to call that blonde. Some experience anyway. So my entry into the industry kind of predates the name of it. And I've been around long enough in the industry to kind of develop a perspective and on what people and organizations want from financial services. And this is going to come as a total shock, but it's service.
Mhm.
Who knew? It's literally in the name. But most people and organizations actually don't get service from financial services. And, but the services are really effective at making more finance, right? So I want to expand that circle of access to profitable financial services to more people and more organizations. That's better for literally everybody involved.
Yeah.
It's better for the industry. It's better in this instance for the small businesses. They get access to the capital. It's economic growth. It's profit growth for everybody. It's good for me too.
Hmm.
And technology, it's good for
Keeps your
everybody.
job going. It's great.
I'm telling you, yeah, got to pay some bills. So, yeah, and technology, I think, is a really good way to expand that access and that circle of financial services.
Yeah. And I think and this is why I'm excited to jump into what your software does too, because before that, it was always such a difficult way for small businesses to even understand what is out there, what can they even look into. And then it just kind of seems daunting and nobody wants to, you know, do the process too. And it just, money gets left in places that would be really helpful for small businesses. So I was curious to know kind of what made you realize, hey, these small businesses are so underserved when it comes to the ability to find capital.
You know, um, so we are big believers in data-driven decisions and then data-driven actions. So and you might hear this as a component of a couple of my answers here in our discussion. But we've interviewed a little over 16,000 small businesses to this point, and two of the top things that small business owners don't like to do as part of owning their small business. Number one is accounting.
Hmm.
Large business owners don't like to do accounting either. They don't. Sorry to the accountants,
It's
but
it's all good. That's why I have a job.
yeah, right, exactly.
That's why I have a job.
Yeah. So frequently, what ends up happening is they don't do accounting, which
Mhm.
leads to the second thing they don't like doing, which is constantly looking for money and capital.
Yeah.
And of course, if your balance sheet doesn't balance, hard to get access to capital. But and then what happens, I think, is people are guessing.
Yeah.
They're they're guessing and going ahead and applying, or maybe doing the college application process here. I'm going to apply to 7 schools, 2 reaches.
Hopefully I get one.
Yeah, and 2 of them are going to be long shots, right?
Hmm.
And that takes time and
Yeah.
effort. there's an emotional side to that too. Nobody likes to get told no. I mean, that just kind of sucks, right?
Mm-hmm.
And I mean, quite honestly, it's expensive for the banking industry too. Costs the same to underwrite a loan you approve is one you don't, as you deny.
Mm-hmm. And I think people don't understand that there's costs associated with getting you to the finish line. There's costs associated with, hey, it just didn't work out.
Yeah. And then what happens sometimes is, the guesses are wrong.
Mm-hmm.
And you get and somebody gets put into a situation where they are choosing the least bad option. Sometimes people or organizations get criticized for choosing a bad option, but it may have been the least bad option that was available to them, right?
Mm-hmm.
And if you've talked to enough small businesses, you hear people say, "Wow, I made some mistakes early, but that was tough, but I got through it." But
Yeah.
not everybody did.
No.
We're talking to the survivors. We're not talking to the casualties. And we reduced the casualty rate here again. Good for everybody.
Right. Yeah. It's kind of crazy how that all happens. I would say, um, where did you like when we look at this thing that's the big capital problem of small business and thing like that? I think you mentioned, maybe you want to show on your screen. There's a lot of money that gets lost every year, and I think this is a key thing for people to understand that you know there's underserved, there's excess, there's all of that that's happening. So if you want to share that, I think there's some really good information there just for people to see how much money is actually out there, but also how much is being lost.
It, so this shocked.
It's mind-boggling, kind of.
This really did. So where these numbers came from started with Illinois. There's an organization named the Responsible Business Lending Association. Their I think their website is businessbillofrights.org. They're advocating for responsible business lending, and there's some legislation in Illinois, the state of Illinois, to require non-bank lenders to disclose the APR, which they aren't. The banks have to do. Banks and credit unions have to legally, but non-bank lenders, finance companies don't. And people get stuck in a trap with predatory lending that they didn't even know was predatory, right?
Mm-hmm.
So the Responsible Business Lending Association said Illinois businesses lose $460 million annually to overpriced credit. That's a lot of money.
It's a lot of money.
That's a lot of money. So I did some math. Well, let's be honest. If you know me, Claude did the math.
Claude helped you compute some things.
Claude helped me compute a few things. Yeah, because math. But I asked Claude to extrapolate it 460 million at Illinois small businesses to the entire country and state by state based on the number of small businesses, in that state. So $11.8 billion nationally. My home state of Georgia, 424 million, 425. We'll round that up, annually. And I think your home state of Tennessee here is 210 million, 211 million annually. And then I started thinking too, okay, well, what happens if small businesses didn't lose that 11.8 $8 billion? I get so excited about this, I get choked up. Right? Yeah.
Right?
So Claude did a conservative, a moderate, and an optimistic forecast here for me. But that's 111,000 businesses that avoid failure.
Mm-hmm.
And in 1.27 million jobs that we avoid losing, and lowers the annual failure rate for small businesses by 1.7%. That's actually meaningful.
Yeah.
This is annually. So Yeah, and I know we're going to talk about using AI to access capital. So I'm going to make a connection. Here's AI saving jobs as opposed to AI losing jobs.
Taking them away, like,
Yeah.
yeah,
But these huge numbers, right?
it's huge numbers. But I would say, like, how is this even happening? Like, where are small businesses going wrong when they're looking for capital?
And that's a great question. So I think, well, if you're starting a small business or you own a small business, you're really good at something. And if you're not starting a bank or an accounting firm, it's probably not finance.
Yeah,
You're really good at swinging a hammer, making a pizza, whatever it is, which is what we want from small businesses. But I like the term financial fluency.
yeah, I
Financial,
like
flu-
that.
yeah, financial fluency skills aren't necessarily, on that list. And so, people don't, it's a skill set. Managing cash flows is a skill set. Swinging a hammer, building a house, repairing a car, that's a skill set. And the small businesses would benefit, the owners would benefit significantly through increasing that financial fluency. And then, even if they don't, they can see that MCA trap, right?
Right,
Or,
and I think it gets overwhelming, some of those titles of, what's MCA, what's factoring, what's this financing structure, what does it mean?
yeah,
Yeah,
it really does. And then it's okay, it's one thing to see it, but let's put it into application. Let's look at this in a forecast, right? And then, how, like literally, how is this going to impact my finances, my cash flows?
mm-hmm.
What we want to do, I mentioned that story, made some mistakes early on. Well, if we provide good contextualized information to those business owners and hear great case for agentic AI, shameless
Mm-hmm.
plug to our platform, you know, then it's decision support. And
Right.
we can avoid that bad decision in the first place. And bad decisions lead to bad outcomes.
Mm-hmm.
And even if it's the least bad, let's let's not get in that situation in the first place, right? And find other financing options. I did just a basic income statement. I used a 5 million in annual revenue contracting, so commercial subcontracting company,
Mm-hmm.
and looked at their annual cost of finance versus with factoring versus embedded working capital that you can access. Again, shameless plug, through the Breva's platform. And the difference in cost is $125,000 a year.
Mm-hmm.
So that's real money.
That is.
I mean, that's significant. And what I think is cool about that, they can stick that in their pocket and, um, you know, go on vacation. They can hire somebody new and buy some time back into their lives. Let's be honest, that's important too.
Yeah.
They can invest that in, you know, in this scenario, it was a subcontractor for commercial construction. They can invest that, lower their bids, win more jobs. Either way, of course, that puts profit back in their pocket too, right?
Yep, it does.
And let's take it out of the predator's pocket.
Mm-hmm. And actually put it to good use and start growing things. Because I think, how many times do you have, if you were to sit across the table from a founder and they're like, oh gosh, you know what, I need some capital, I don't really know what to do. What would be probably those first two questions you would ask out the gate on that? Because that is, it's like, there's all this money waiting for you out there. How do we put it in your pocket and make you grow? And I mean, you and I both, we love small businesses. We want to see them thrive more so than some of the large corporate guys that, they're great. They have a good thing going, but there's so many people that have phenomenal ideas, and to see them be successful.
I think, and we're seeing this now, like corporate jobs, the traditional corporate jobs, the office jobs are being reduced. And
They are.
yeah,
AI is coming in and kind of taking over some of those. and what they do, and that's
Yeah.
going to change a lot of things.
And I think small businesses and entrepreneurship is what's going to fill that void.
Hmm.
That's the world according to Blair. But
Yep.
yeah, the
So we'll
first thing,
check back in with you a year from now. We'll be like, yes, you hit that right on the
we'll
nose. That
find
was
out.
right.
Yeah, kind of hold me accountable for my predictions.
Yes.
Yeah. Yeah. It has been said that I have lots of opinions, and on occasion they're right. But yeah, so we'll find out if this one is. What capital's a tool, right? And so it's not that you need the tool; you have the goal, and then you want to think backwards and find the appropriate tool to accomplish that goal. And I live in an old house, 1933, built in 1933. If you live in an old house, you get really comfortable with like Home Depot and Lowe's, Ace Hardware, and
They're your new best friends.
yeah, and you learn how to swing a hammer or you write checks.
Hmm.
And so I have learned that the right tool matters a lot.
Yeah.
Yeah, but the hard way sometimes. But
Hmm.
same thing in finance. And what I would also say is don't limit yourself to one type of capital. I was with a group that's trying to democratize access to private equity and private capital. And one of the questions that got posed in this group discussion was, how many of the funding seekers know what a term sheet is? And
Probably very little.
almost none.
Yeah.
But if you want private equity or private capital, you're going to have a term sheet involved in that situation, right? Financial fluency.
Yeah.
The other thing that I think is amazing, there's grants, lots of them for small businesses.
There are.
We actually have a database of 1,000 grants, and grant providers complain that they don't have enough applications for free money.
Interesting.
We got to change that.
Yeah.
I mean, I want those grant providers to have the hardest decision they've ever had to make
Hmm.
to figure out how to award those grants for free money, right?
Yeah.
And but that's a process too, right? I mean, that's a time thing. Like it's looking for another type of capital and
Yeah.
finding those grants that fit my type of business, fit my you know fit where
Well,
I'm
and it's
going.
exhausting looking for it too if you don't
Yeah.
know where to go. And I think that's one thing that's very convenient with your software is, hey, here's everything that could be for you.
That's exactly right. And if I can say, we do give a grant every quarter, $5,000. It's called the Thrive Grant.
Hmm.
We want as many applications, and we want to have it as hard of a decision as we ever had to make to award that grant. So a plug
Plug for that.
for some free money out there.
Yeah.
So if you're looking for free money, breva.ai/Thrive Grant is a good way to find that. But just like the capital, let's call it grant capital.
Hmm.
It is, and debt financing capital. So instead of looking to apply, have it come first off. In particular for debt, if you don't fit the requirements, don't apply. I think it's a
Yeah.
640 personal credit score for an SBA loan. If you've got a 620, it's a hard no. Doesn't matter how
Yeah.
cool.
Don't waste your time. Don't waste anybody else's
Yeah.
either. And I
So
think the other thing that goes in that too is a lot of times people have so much debt that then they're trying to apply for more capital. Now it's not helping them grow, it's just creating a greater risk than what it is. So I'm sure you've seen that too, and it's just robbing Peter to pay Paul continually and never getting out of that hole.
that literally is the term we hear all the time.
Yeah.
And we literally hear that in particular with the general contractors and,
Hmm.
with their subcontractors, and they're robbing Peter to pay Paul,
Yeah.
robbing this job to pay for this one. And at some point, it's a kind of a death spiral too. And, just one thing goes wrong in that process, and now you're a statistic instead of a business.
Hmm. You're the
But
statistic in the wrong side. You want to
yeah,
be the plus side statistic where, hey, this is all helping us get to this end goal instead of
yeah,
just continually digging. and making it worse than it was yesterday.
Exactly right. And
Yeah.
so, and here's another good use case for technology and AI. Like, for example, we know the credit box of our capital partners. We know the financial situation of our small business users. We'll only make a connection if there's a connection, if you match. And so if you don't match, and when we explain why, like there's context, that's part of micro learning. But then it's here's your homework. So one of two things: you want an SBA loan, you've got a 620. That's a no. You have two choices. You can improve your personal credit score, and you can do 20 points. Wouldn't take you that long. Or here's another funding option, and you can make a choice, a contextually guided choice on what you want to do there. But don't apply until you're ready.
Yeah.
Then it's not our money, so I can't guarantee approval. But for clarity, but if you match the credit box, the denial rate is infinitesimal, right?
Yeah.
And what I tell our capital partners, and this is going to come as a shock too, but that can be Captain Obvious. But better run businesses repay their loans at a higher rate.
Yep.
That and getting paid back seems to be important in business or in banking, rather.
All of those. Well, I think too, they're a little more conscious. They're not taking out a handful of those micro loans too that have such high interest rates that you end up paying so much. And yeah, it's convenient because hey, it's Shopify or hey, it's Stripe, and they're just taking a percentage of my daily sales, and it does get paid back faster essentially because they're garnishing your income. But how much you end up giving away when you and your solution can help pave a better way to get money.
So, that little percent, is 75% APR. You're going to buy a car with 75% APR? No, you're not.
No.
You're going to buy a house? No, you're not. I mean, and that's the point of that legislation in Illinois, is to force that disclosure and know what you're doing. And I think most people, if they have another option, when they look and say that's 75% APR, that doesn't seem like a good idea.
Yeah, no, you might want to go in a different direction. But I think, there's so much of that. But I kind of want to transition a little bit into the AI because I think there's so much in that. As you've said that it's no longer using AI to get ahead. It's use AI or you're pretty much going to go out of business these days. In a lot of ways, it's you've got to stay in front of it. Why and where, I guess, do you see AI becoming more of an essential infrastructure for the small business? Not just as a tool, but something that kind of partners alongside of them.
And, I think the biggest gains from AI adaptation are going to early on, and I think we're early in the cycle with AI, it's going to actually come from small business.
Yeah.
Big businesses have data challenges. They have, size and scale issues.
Red tape that they can't cut through as quickly. Yeah. Small businesses, they can pivot and be more agile, which helps.
Absolutely. And it does. And you think about efficiency and you think about, I've yet to meet a small business owner that has a lot of extra time in their day, right? So then you look at, all right, how do we offload tasks that add more value time into my day? And
right.
Accounting is a good example. I mean, if you start a construction company or a mechanic shop, you want to fix cars and build stuff. You
don't want to do all the other stuff.
Yeah. Oh, well, that's cost of goods sold. That's inventory, right? They don't want to categorize transactions. So, but, find the AI tools that, add that efficiency in your life. The example I've been using is, if you're going on a trip, and I live in Atlanta, so any trip of 15 minutes or more, I'm turning on Waze because I want to find out where.
You got to find out how much traffic, which route might save me 2 minutes.
Exactly. And 15 minutes is like 4 houses down in Atlanta.
Yeah.
So, But everybody, I mean, everybody's using their phone for Waze and or whatever GPS, right? So
Yeah.
they're avoiding the traffic snarls. They're avoiding the mistakes. And there's waypoints along. You might have more than one stop in your
Yeah.
goal. So the way I see like our AI, we see our AI as an AI CFO. We've named her Bree, given her a persona. She's your finance GPS.
Hmm.
You tell Bree where you want to go, and then Bree is going to help you avoid the traffic and get to where you want to go with the waypoints along the way in the
Yeah.
most efficient process way possible. And you might get rerouted, but that's okay
But
too, right?
it's gonna get you. It's gonna get you there in a better way, even if there's the rerouting. Because to me, the rerouting is these weren't the grants or the capital that was supposed to be for you, and
Yeah.
we're going to point you to where you are, where you need to be based on certain parameters of who you are and who you want to be.
And and then it's decision support too,
Yep.
and you get that too. Do you want to go this way? Yes.
Hmm.
You can even prioritize, your route here. Yeah, so to me, that's a pretty good analogy. It's
It
not
is.
necessarily, yeah, perfect, but even like driving through Atlanta here, you use, GPS enough, you learn where, the common accident areas are.
Hmm. You learn
Learn
your shortcuts of, hey, I should always go down this little street, and it saves me 15 minutes of time.
where traffic builds, right?
Yep.
Well, I mean, that's micro learning.
Hmm.
And one of our goals with Bree is micro learning. We want people to understand the dynamics of their cash flows. Nobody has time to sit through, I'm going to take this 20 session or 20 week, class.
No.
That, just doesn't happen. But so it's micro learning. That's why we give context to a
Hmm.
recommendation. And this is why. Like even when we do show a calculation, you can hit show me the math.
Yeah.
First off, that's credibility, but it's also, and then over time, it's a little drip, but over time, our users develop the finance skill,
Hmm.
which is, what we want. That's
Yeah.
also good for everybody.
It
So,
is. And I
except the
think
fact,
that's the cool part about the software. And I don't know if you want to share your screen and kind of just introduce the product as a whole and why the Asprey is so important that you guys have made in there, and how does it work and who it's designed for.
yeah,
'Cause I love that it's very intuitive to use and navigate.
yeah, I didn't, I'm literally downloading transactions now, so
It's
I
all
didn't
good.
didn't have it ready to pull up, but we did a release last night, and I'm downloading the release. But I, we've learned part of that 16,000 interviews. We learned what people want,
Mhm.
and so like we've changed the Ask Bree section. We have now it says these are the top three recommendations to use now, and or to do right now.
Yeah.
And as it turns out, people want to be told what to do. And
Hmm. I've seen that more and more. It's kind of interesting. It used to be people were more, hey, let me go figure this out on my own. And now people are more dependent on, hey, somebody just tell me what to do. It's easier that way. And it's kind of it's to me it's sad and funny at the same time. Like, man, you don't want to like be creative and try to find something, and it's easier to just follow a little checklist and get it done.
yeah, that is. Let me show you this. See if this
Yeah.
helps here. The so when I'm looking at the our platform here, we've got Asprey where she'll start literally coaching you. You can have a conversation. You can literally have a voice conversation, or you can text with her. But this is that the thing that are in our interviews that we found that users want. So
Hmm.
I can brag on this decision because it wasn't my idea, but we stuck a chat bot on top of that, those 16,000 small business interviews, and started talking to it. It's a little weird to talk to your data, but you
Mm-hmm.
get some really good insights. And what people want, they want to be told what to do.
Yeah.
And so, apply to a grant here, nudge these two invoices. You can click why, this, and it'll give you the context of why Bree is suggesting that's what you want to do, what you should do right now, right? And then we also heard that, it is all about cash flows, right?
It
I saw a
is.
statistic that said 80% of business failures are a result of cash flow challenges.
Mm-hmm.
And
I see it all the time. Yeah.
what I don't understand is what are the other 20% of failures for?
Mm-hmm.
And regulatory issues.
Leadership, bad products. Yeah.
Yeah, I think that'd be smaller. Bad products
Yeah.
don't sell, and that's a cash flow issue. But anyway, that's an aside. But so we've devoted more real estate to your cash runway here, and literally clearly showing that. And is like we talk about access to capital. Well, let's look at that, and you can see in a forecast the difference between you know financing with factoring in
Mm-hmm.
working capital, a line of credit,
Yeah.
and you could literally see that in your cash flows. And the chances are you're going to like one better than the other,
Mm-hmm.
and so we've devoted a lot more access to that too.
Yeah, that's awesome. How does this solution help both businesses and lenders?
Yeah. So, I was kind of talking about that before. Well, there's
Mm-hmm.
two things for lenders. I literally was joking, but it's true. Better run businesses repay their loans at a higher rate. That's
Yep.
really important in banking. But nobody in banking really does anything to help small businesses pay them back.
Mm-hmm.
And it's literally the experience that small businesses want from banking. JD Powers does a survey, small business banking customer satisfaction survey. It gets released in the fall of every year, and if you look through my LinkedIn feed, you'll see me posting it. The average score this year surged to like a 730 something.
Oh,
So
interesting.
so it surged, or 720.
Yeah.
It surged to a C minus. And I'm pretty sure my parents wouldn't have liked that if I said my
No, not so much.
surged to a C minus.
Yeah.
And but you know why? Because you know what people want? Help with their money. You
They
know what they
do.
don't get? Help with their money.
Mm-hmm.
But we do here. So to me, this is the experience that small business owners want.
Yeah.
And it's a competitive differentiator. But there's also something else here too. And I'm a big believer in this. Don't say no. Say not yet.
Yeah. Agree. Because otherwise, when you say no or it's impassable or things like this, you train your mind to not even want to. But if it's not yet, it's, oh, well, in the meantime, I'm still working towards this.
Yeah.
Yeah.
So, and I tell our capital partners this, like, obviously if it's a fraud issue, if there's three different fonts on the bank statement, that's just a hard no. And
Mm-hmm.
that is what it is. But, if don't, if half of business loan applications get denied, a significant portion of those are near misses.
Yes.
And you think about the impact both on the bank and on the businesses and even the community that is supported by those businesses. If we convert a bunch of those no's, not yet, into yeses.
Mm-hmm.
So instead of saying an outright denial, say not yet, you got some homework to do, refer them to us. Bree will coach them up, send them back.
Yeah.
That's incremental deal flow. And it's, access to capital for the business. And then the next step of that is let's, let's not apply, let's not guess. So if, as part of, or even in lieu of a formal application, somebody onboarded into our platform, the lender can literally see,
Yeah.
and programmatically, we know if they meet the credit box. So you don't even have to apply. It's got to go through underwriting. But you click a little button and it sends the lender docs, and only when they meet the requirements. And that's an efficiency issue because it literally costs money to underwrite the loan,
Yeah.
and that make that process easier. People in banking talk about frictionless lending all the time. Well, here we go.
Yeah. You
Pretty
made a
friction.
way for that.
Yeah, it's pretty
Ha-
friction.
Yeah. How often do you have people that they've come in one time, you guys have helped them get various capital or grants, and then they come back around because now they need something for the next phase of the business, or there's seeing what new grants are out there depending on what they're doing?
Yeah, and we're new enough. We haven't had the
Yeah.
second cycle of in particular longer term financing. The working capital is going to change that.
Hmm.
Obviously those are really short duration loans, and so that financing is going to turn over really, really quickly. And the other thing, but kind of to your point, um, the other thing to financial institutions or the lender, I mean, first off, there's value in the deposits too, right?
Hmm.
All institutional lenders are looking for liquidity right now. And
Yes.
so those business deposits add to profitability. So does like payment card usage. And then, you know, you need people need more than one type of financing. You might need a new truck. And
Hmm.
at some point you get enough trucks, you got to have somewhere to park them.
Yep.
And so there's the building loan or commercial real estate loan, and and it kind of, and then working capital to,
Equipment. Yeah.
right. So
Yep.
you can have all of that,
Mhm.
and that makes a big difference too.
It does, and just kind of understanding the long-term plans and things like that. And I think that kind of comes into the next phase of our conversation is just looking at advice for founders as and even leadership or whomever the big decision makers are in those organizations are, what are some of the biggest financial mistakes you see small businesses making today that
Yeah.
they could avoid when doing this? And I think we've chatted about a handful of them already, but just to kind of tie it all together.
Yeah, certainly the cost of capital is probably the number one,
Hmm.
and you'd expect us to say that. I mean, there's a reason we started our company, to do what it does. But even if I go beyond just that, I'd probably say time allocation.
Hmm.
And there's 24 hours in a day. You can't get the 25th. And
Even when you need 25 to 30 hours, just not available.
not going to happen. So that is
No.
literally the one non-renewable precious commodity. And choosing how you're going to allocate your precious time is a really difficult thing. We see that. I mean, we're a small business. We're in growth mode, and everyone in our organization is wearing a lot of hats,
Yeah.
and we have to be very intentional on how we allocate our time so that we get to the point that we want to, where we want to be. And we are absolutely using AI tools to make things more efficient. Like in business development, everyone talks about ideal client profile,
Oh yeah. All the time.
right? So I mean, we're quantifying what who and what our ICP looks like,
Hmm.
and then finding more organizations that look like that, and then finding ways to access more organizations that. But literally, we have an ICP scoring mechanism that's mathematically, or data driven, that's mathematically driven. And 10 years ago, 40 years ago, three, we couldn't have done what we're doing now.
Hmm.
And I mean, AI is driving a lot of that.
It is. It's helping a lot in those respects, and I think it kind of even comes to, if a business owner is thinking about, hey, I'm going to need capital in the next 6 months, what do I need to start doing today? And I
Yeah.
think that is a part that plays into it. If your score is too low, then let's work on some ways to start increasing that amongst a handful of other things too.
Yeah. Absolutely. And if you're thinking, all right, I need that capital to open a second location.
Mhm.
Well, where are you going to put that second location? And
Yeah.
that could have been a few years ago. Well, it would have been a much more expensive and time-consuming research process.
Yeah.
And now I haven't done that, but you start using AI tools, and you can hone in on specifically where you really want to be much more quickly, and then you can
Yeah.
use that capital more efficiently, right?
Hmm. You can. So here's something fun I always like to do is a few rapid fire questions because this
All
is
right.
always all right, these are the things we hear all the time.
Well, and if
So
it's a
what
tough
is,
question, can I just duck?
yeah, just watch
Yeah.
out. One of them is what is one financial metric every business owner should understand?
Ooh. I'm gonna
You have
say
a lot of good ones.
I'm gonna say debt service coverage ratio. If you're looking for financing, and comments, and I may get torched for this in the comments, but DSCR is a very meaningful metric on a business's ability to access capital, and it is a very unknown. Um, it, it's infrequent that we talk to a business owner that really knows what that is, in
Yeah.
particular if they're early on.
Mhm.
And so, at least I will say that's the one that is the most unknown, and I think trips the most organizations up in not getting access to what they want.
Okay.
Does that make sense?
That totally makes sense. Yep. What do you think is the biggest myth about business financing?
You can't find financing.
Hmm. I
Yeah,
hear that from a lot of people, or not that they can't find it, they'll be like, "Oh, well, it's just virtually impossible. I'll never qualify."
yeah.
And like to your point, there's all this money out there to be had, and they need people to apply for it.
And yeah, they're looking at the wrong type of capital. They're looking, they're seeing that equation from the wrong angle. And it's what do I need to do to get to where I want to be.
Hmm.
I, I played soccer in college. My soccer coach used to say this thing, and I thought he was crazy when he'd say it. We've got to do the things we've got to do to get things done.
Hmm.
And I just kind of look at him and be like, "Oh man, that's crazy." Now I think it's genius. Now
Yeah.
I think it's some of the best advice I ever got. And you got to do. Where do you want to be?
Hmm.
Now you got to do the things you got to do to get there.
Yep. Whether you like it or not, it's the blood, sweat, and tears to get on the other side.
That's it. And
Yeah.
so start thinking about the journey as how we're going to get there instead of
Mhm.
the goal. But capital's available. It's a question one: is it really the capital you want, and are
Mhm.
you looking for the right type of capital?
Mhm.
I've talked to CDFIs. If you're early and struggling to find capital, anyone listening, CDFI, Community Development Financial Institutions, they largely exist to give business owners their first capital. So most of them are nonprofits. Sometimes they're banks too, or credit unions. Sometimes it's just a lending fund. But it, you can Google CDFIs near me. There's plenty of CDFI finders out there. You can go to the CDFI fund, which is I think the Department of Treasury, and find a CDFI. Look there first.
Yeah. That's good to know. Here's my last one. Here's your thinker question.
All right.
If we look 5 to 10 years from now, how different do you see the financial world looking for small businesses? Do you think founders are still going to be kind of navigating blindly, or will AI really come in and give them this additional clarity that they have always needed so they can compete more with the bigger guys?
So I have a vision on what I'd like to happen. And some of my banking friends might not like this as much, but
We'll reserve the comments for their thoughts.
I want to flip the power dynamic. Right now, businesses chase the money. I want to flip the power dynamic and have the money chase the business.
That would be really cool.
So, like, you think about what AI can do in data. So we know the financial health of our users, right? Programmatic, even a score, an algorithmic measure of the financial health. We can see credit risk now is lagging. So when a loan gets funded, the business is credit worthy at the time the loan is funded. And tomorrow, probably next year, you don't know. But like we can see forward indicators. And of course, the whole point is to apply resources to avoid the problem in the first place. But I could see a world where the business owner opts in, discloses their data, and then the money, the lenders compete and make bids to the business owner. And I mean, AI can be the enabling technology for that. That would make me happy.
Yeah.
So let's have a reminder set for five.
Have a reminder set for that one too.
And see, Blair's just completely nuts.
How closely do people want to bet on how your opinion will be?
Yeah. I think that'd be a cool world.
That would be a really cool world.
I mean, most of the time, the business is competing to earn the business of the customer. In banking, the customer has to compete to earn the business from the bank.
Yeah.
And, we flip that. You want to enable more small business, lower that failure rate. Here we go.
Yeah, that would be something. But thanks so much for coming on today, Blair. I really appreciate it. And I think, all this access to capital, and it's, one of those big make it or break it factors that pops up for small businesses. And I mean, it's clear we're continually entering a world where technology is going to make businesses smarter and faster than they've ever had before. And that's going to be just an interesting ride to be able to see how that all carries out. But if people want to learn more about Breva, or I always say your software, Breva.
Close enough. Breva. Yeah, Breva. Yeah.
If they want to learn more about it or be able to speak to you directly, what is the best way to get in contact?
Yeah, thank you. So Breva, Breva.ai is our website. I am literally the only Blair Gatchel on LinkedIn. So I'm hard to find. And Blair@Breva.ai if you want to send me an email directly. I'd love to chat. I always say, it's always worth the conversation. Maybe there's a there, maybe there's not. And if not, we'll part company as friends, and that's fine too.
Yeah. Or a not yet, right?
Or a not yet. Yeah. Maybe we're not there yet. Yeah. And we're, figuring out even for our business, sometimes people aren't there yet. And, got to have transactions and data for the AI to analyze, for example. Yeah, I've really enjoyed this. This has been and I love the rapid fire questions.
Those are always my favorite part. And I hope everybody listening that you got some great information from it and kind of help you guys as you're going down your route of finding capital or things that you didn't even know were there. So I'm hoping, everybody gets some good information from it. So thank you again, Blair. I really appreciate your time.
Well, thank you. I've enjoyed